The idea of investing in emerging markets comes with a lot of preconceptions, but perhaps it's time to rethink what you know. You're watching The Pitch and I'm Sarah Allen. Today I'm joined by Dr. Joseph Lai from Ox Capital to discuss all things emerging markets. Welcome, Joseph.
Thank you, Sarah.
So to begin with, there are a lot of terms thrown around when it comes to emerging markets, BRICS, all that sort of thing. What's your definition of emerging markets?
Emerging market basically refers to a group of economies which are on its way to becoming developed markets. So what it refers to are these countries which are, I guess, less risky than the really frontier markets like Africa, but actually have grown to a certain size, but not yet reached the stage of developed markets yet. And for us, typically, this predominantly refers to countries in Asia and also countries in Latin America. And those are the countries of focus for us.
Are there any particular markets that you focus on?
Yeah, sure. So we particularly like those economies which has gone through some tough times in recent years. And usually post the tough times, what happens is that reforms and in a lot of occasions, good reforms gets undertaken and implemented. And then in the subsequent years, there's actually a lot of positive dividends to be achieved by those economies. And so there are a few countries that belong to this category. These include India, Indonesia, Vietnam, Brazil, and to some extent China as well, which has gone through this tough transformation. So we pay a lot of attention, particularly in these countries, because there's a lot of upside, we believe, in the medium term.
Generally, interest in emerging markets has lagged developed markets. Why do you think this is, and why do you think investors are wrong in the perception?
Okay. Look, I mean, emerging markets have not really been the best performer. I mean, in the last decade and a bit, the developed markets, particularly the NASDAQ, has been the place to be. And we can feel the hype and the excitement over AI, in recent weeks or recent months. So, a lot of people's money are in certain markets, but away from emerging markets. The reason for that to be the case, I think I can put it down to 3 points. First of all, after the global financial crisis more than 10 years ago now, those developed market equities were very, very cheap. So it's prospective at the time. And post the GFC, there was a period of disinflation, low inflation, which again, favored developed markets. And lastly, in recent years, there has been the strong US dollar and rising of the US rates, which are negative to emerging markets. So all up, I mean, in the last decade and a bit, it hasn't been a pleasant time for emerging markets equities. But I guess I can say, when I first started in the business, which was more than 20 years ago, the question that I got asked was, why bother investing in developed markets? Because there's no growth. Emerging market is where the growth is, but now it's completely the reverse. So I guess the outcome of that is, of all these things, is that emerging market equities is typically extremely cheap, bearing in mind the market hasn't really moved in 10 years compared point to point. And in the meantime, these economies typically have grown at 5 to 10% a year. So you can imagine there's lots of opportunities, very cheaply valued, and the initial problems of low inflation, high issue valuation, and we believe the strong US dollar are all sort of reversing, going forward. So we think it's prospective, over the medium term.
Where are you seeing the key opportunities?
So these key economies which have undergone the reforms, as I mentioned before, Indonesia, India, Vietnam, and in Brazil, we think it's quite exciting what's going on, because a lot of these countries are benefiting from the diversification of the supply chain away from China on the margin over the last few years. And so they're getting these investments into building factories and stuff like that. The government's actually quite good now in these countries, that they're actually trying to do things to attract investment. So infrastructure is getting put in, like road, rail, power stations, airports, and the like. And as a result, exports actually growing quite nicely in these countries. When most people would think, deglobalization, exports not doing well, but actually in a lot of these countries, they're growing high single digits to double digits. And this really reminds me, particularly in countries like India, Indonesia, and Vietnam, this really reminds me of what China went through about 15, 20 years ago. Consumption was growing, infrastructure getting put in, exports booming, And it makes a very nice, I guess, nice and prospective, market to invest in, particularly when the starting valuation's cheap in these markets. Yeah.
Can you share some examples of companies that reflect these sorts of opportunities you
Yeah.
see?
Okay, one of the key stocks we own is Reliance Industry. So this is the dominant Indian operator in the internet space, in retail, and in all things related to the cloud and potentially AI in the future. It's growing at 15 to 20% a year, dominant in what they do, and it's available on around 20 times price to earnings multiple. We think it's highly prospective. On top of that, there's a company which I think some viewers may be familiar with now. It's called BYD. I mean, this is a very dominant electric vehicle or hybrid vehicle maker in China. It's growing extremely fast domestically, and also it's just starting to export their cars to the rest of the world. And it's absolutely leading in the technology, in electric vehicle manufacturing, in the cost which they can achieve, and they will be competitive even with some tariffs being applied onto them in some parts of the world. It's again on a teen PE multiple for a company which is just starting to tap the global market in which it's, I think, the absolute leader in terms of electric vehicle manufacturing. Another stock which we think is prospective is a company that's in the middle of the AI revolution. It's a company that's based in Korea. It's called SK Square. Basically, almost all the high-speed memory that goes into with the NVIDIA chips are supplied by SK Hynix, which is owned by SK Square. And we get to participate in the AI revolution by paying only 3 times earnings for this business.
What should investors keep in mind when it comes to investing in emerging markets?
Emerging markets is actually a big part of the world. I mean, literally, it is about 60% of the world's GDP, generates the bulk of real growth in the world, and in fact has the majority of the world's population. However, it's grossly underrepresented in, I guess, most people's portfolio and also in indices. I think it's about 13% of global indices. So we think ultimately, there is likely to be a rubber band effect at some point where their weighting actually goes up, probably through valuation improvements. It's quite cheap. So we think it's underrepresented. And the second point is this. I mean, there is more understanding of the nuances involved in investing in emerging market equities. I mean, the understanding of the company, the management, the industry dynamics, and also the regulatory landscape, I think the requirement there is a bit higher. So I think it means that one has to do a lot more homework, or get someone who can help them with that.
How can investors access exposure to emerging markets in their portfolios?
So I think a more astute way to access emerging markets equities is to find stocks which are quality franchises with a high level of certainty of earnings growth delivery. This is what we look for, because we believe that the future of EM are basically these kind of franchise stocks, which will be bigger and bigger, will grow bigger and bigger in the next 3 to 5 years, as opposed to the story of old, which are I guess are typically commodity producers or heavy industries, which in some markets still dominate the indices. So be selective and choose the better businesses within those economies we think can deliver very interesting and prospective returns.
Thank you so much for sharing those insights with us today, Joseph.
Thanks very much, Sarah.
If you've enjoyed this interview, please subscribe to Livewire Markets. Thank you for watching.